Hello everyone and welcome to today's cryptocurrencies update for Wednesday, November 9th. And uh, it was only Tuesday yesterday and I was already exhausted for the whole week, given of course the price action we got. We knew we were expecting a pullback after 5 waves up, always expect at least 3 waves lower. So that was the expectation. For example, for Bitcoin, we were looking for a low somewhere in the low 19,000s with a warning that if we go below the October low, 18,800, I believe it was, things would look very dicey for the immediate bullish path. Similarly for Ethereum and other cryptocurrencies. And boy, did we get quite the drop, and it did drop below those key levels. So that definitely caused me to have several headaches. I really don't like it when things are moving along really nice. We ticked off all the boxes for a picture perfect impulse wave, and then the market threw the proverbial curveball. It always happens when I think always when I get it too often right, then it's time for the market to prove me wrong. And why is that? Well, I'll show you in a minute. And it is based on 60% of the time, it works every time. This is from the movie Anchorman, and I think it is a fantastic quote because, as I always say, anticipate, monitor, adjust. You cannot expect to be right all the time in the markets. Again, did we expect a drop? Yes, that was absolutely given. I don't care about the news, what it is, it's fine, doesn't matter. For all I care, it's because Trump did something or Biden or farted, whatever it is. It doesn't matter. The news doesn't matter. The why doesn't matter. We knew it was coming. Unfortunately, we got the ferocity of it wrong, especially for Bitcoin. The other ones are still on track. So let's start off with what we got right. So, we don't want to beat ourselves up too much on one or two misses. What matters here is first and foremost, where did we get it right? All right, the first one we got right is Cardano. Cardano was close to invalidating a last fifth wave lower for this ending diagonal. And it did 5 waves up here into late October. It dropped, and then it had the potential to do a 1-2 setup. Okay, it didn't. It had to hold the early November low for that 1-2 setup. So here you show the two possibilities the market has. If you see my cursor, we have the orange 1, 2, 3, 4, gray A, gray B. So that can be 1A and 2B. That's why you always have to label those initially. Then we got another 5 waves up. C waves are 9 out of 10 times. 5 waves, few occasions where it looks like 3 waves is when this actual C wave itself is a ending diagonal. They're overlapping, so it's very hard to sometimes discern if it's 3 or 5 waves. That's the only times that we have a, I would say, 3-wave C wave, where it's very hard to discern if it's really 5 or 3. That's fine. In the majority of occasions, a C wave is 5, 9 out of 10 times. So we had this potential ABC or 1-2 setup, and it failed because it broke below the early November low. This is that where we show the possibilities. Those are the two possibilities the market had. Would we have had good news? I'm pretty sure we would have rallied. Now we had bad news. It was interpreted as bad news. I guess it is bad news, but the news is what it is. And we are dropping. So far so good. This is still moving along as expected. All right, credit where credit is deserved. Then we have Avalanche. Avalanche, we were also tracking lower for a diagonal as well. However, I find the current decline a little too fast for a final fifth wave. It might be possible, but I want to upgrade or downgrade, however you want to look at it, the wave count to a 1-2 setup. We're now with 3, 4, 5, and then a 3, then a 4, and then a 5. And we should target somewhere, I would believe, in the single digits. So that one is still also on track for lower prices. We were looking for lower prices, but given the decline currently, it looks like we might have a simple standard impulse on our hands. So here is then the A, the B, and then this subdividing wave C. We already knew that this diagonal here that started in June was a 4th wave. Again, could have been a leading diagonal first wave. It's not. So we're in the camp that this is the final fifth wave. All right. So again, this one still looks pretty good. Zoom in a little bit here so you can see the details for the current decline. Looks ferociously. When I zoom in too much, stock charts stops the whole proper labeling of the waves. And we have 4, 1, 2, 1, 2, and a 3, 4, 3, 4, and 5. That's the preferred point of view. It shows here minus 0.34, but that's wrong. It's just an anomaly in stock charts. Somewhere I would say probably in the $8 range, $5 range. Looks pretty good. Solana is also working pretty well. This one I also upgraded the wave count to a 1-2 setup. Why? Because the current decline is too steep. Originally also had this as a end diagonal wave 5, looking for 20 plus or minus $5. We're right now at 13.5. Not too bad, not too bad. And we knew Solana had to break above $38 on a daily closing base to negate this 1-2 setup, or as I had a 1, 2, 3, 4, and then a 5 setup. Still can be a fifth wave. It's fine. Ultimate downside target in this case is revised a little bit lower, potentially to single digits. But this is where we anticipate, we monitor, and we adjust. Just because we do an anticipation in April doesn't mean that we now need to stick to that anticipation for the rest of our lives. That's of course not how it works. Just like weather, we continue to update the weather forecast. Nobody has any problems with that. Same with people that do financial market end of year projections. They're constantly being revised. Nobody frowns on that either. It's based on the latest information that becomes available. You anticipate, you monitor. That's the only way you can go about. So now it looks like we have a wave 3. We should have a 4 and then a 5. We're already right in the ideal wave 3 target zone. And again, as I wrote in yesterday's email to you, the first one, that I will do my magic on the charts. When things change, I adjust accordingly. And this looks like a better wave count. 1, 2, 3. Again, no real change other than that the downside target might be lower than anticipated originally. But based on the ferocity of the decline over the last 4 days, this fits better as a third wave and not as a fifth wave. I would say Solana has to go back above this level here. It's about $30 to suggest that something else is in play. But I don't see it. Everything is pointing down, and the bounces should still be viewed as corrective. Then we have Binance Coin. Binance Coin moved along very nicely as an impulse as well. Ticked off all the symmetry boxes above 300. We target 355. Above 355, we target 385. Ticked off all these boxes. And then yesterday, look at this horrendously horrible candle. It completely fell out of bed. But again, we had the potential 4-5 setup. So that has all been met. So I'm not too concerned about this wave count, other than that we now have the potential for an A, B, C of a larger bounce only versus a 1-2, 1-2 setup. Okay, so the line in the sand is also here, the October low. We cannot go below the October low. If we do, then all we got was a B wave bounce of about 38.2% retrace. And then I think we'll revisit into the 200s once again before the C wave is complete. That's why we always label everything as 1A, 2B, 3C until the market proves that it is really going to be 4 and 5. In this case, it doesn't look like a 4 and a 5 with the only bullish alternative a 1-2 setup in green, 1 and now 2. But the decline starts to look quite too deep for a wave 2. So please keep that in mind. And this is all why you always want to have stops in place. Now, I wanted to show here, let's see if we zoom out a bit there. This is the trading alert from yesterday for the cryptos. Again, this is the crypto system trading. It doesn't only produce winning trades, it's had lots of losing trades as well. If you can't short, it's currently quite hard to make some money in the cryptocurrencies. But I just wanted to point out that, for example, we had quite some good returns yesterday, despite all the carnage on the short term, okay? Cashed in winners on Binance Coin, MATIC, and Solana. So those were winners. We are already in cash in Avalanche and Ethereum, so no harm done whatsoever, nothing. The system already told us the day before to go into all cash because we got stopped out. And since no system is perfect, Bitcoin and Cardano were losses. It happens. So I still think 5 out of 7 is a pretty good return. Not too bad. Others will be losing trades. There might be more losing trades. I can't avoid those. But again, it shows you, if anything, that selling into strength and raising your stops accordingly is always a prudent strategy. It always is. Whatever your time frame, short term to long term, that is, I think, the only way to go about to ensure that when the proverbial, you know what, hits the fan, you're out. You're going to get stopped out, or you've already taken your profits, and whatever happens, you couldn't care less. You're running on house money. So with that in mind, you know, I think it's always good to have that in mind. You avoid this total panic here. Binance Coin was a winner. It's been long since the 25th, and it's held it all the way, selling into this strength. And then when yesterday happened, couldn't care less about it. Okay, that's the good thing. And I really like it. So now we'll have to see if the wave count is going to be an ABC. Again, after 3 waves down or up, doesn't matter, expect always at least 3 waves the other way. And that seems to be the case, ABC, ABC, so far, okay? So that is now the next wave count we're checking for a potential extension of this wave 4. Then we have Bitcoin. Well, Bitcoin is the problem child. Again, from the October 13th low, we had loud and clear 5 waves higher. There is no arguing against that, absolutely not. See it on Ethereum as well. I'll show you the Ethereum case. But of course, it cannot be a 1-2-1-2 setup anymore, because the current decline is, of course, below the October low. This one is dead in the water, unfortunately. So the only way to resolve this is a 1-2-1-2 setup. So, and then the 5 waves higher was a C wave. As I said before, C waves are 9 out of 10 times 5 waves. It's the only way to resolve it. There is no other 5-wave sequence to explain the current price action with this tremendous drop. So we should now be in this gray wave 3, gray wave 4, green wave 3, 4, and 5 to around 12,000, potentially a little bit lower, if we follow an ideal Fibonacci-based extension path. But this seems to be the most reasonable path to complete wave 5. Zooming out, and that is the wave 5 of all of primary 4, or only wave A of cycle 4, to be determined, okay? But once this wave 5 completes, expect a massive rally, even if it's a bounce. I wouldn't be surprised if we go back to the 40,000s. So there's tremendous upside potential once this 5th wave completes. On the weekly time frame, this also can be assessed as a diagonal. It's fine. We broke here now finally below the symmetry box line here. So that again targets already into the 50,000s. That's the symmetry downside target. The symmetry downside target for about 15,000 fits very well here with these 3rd and 5th wave lower. Okay, so this is then the wave count we're looking for. The whole idea is if the June low in 2021 was primary 4, or if it was only an A wave, and then a B wave, and now in a C wave, versus this is all of 4, all of 5, and now we have a initial impulse decline. And if we get an initial impulse decline, then we should see a 50 to 62% retrace, which gets us to about 45, 50,000, okay? And then we get the next leg low, A, B, C. To be determined, but once we complete this red wave 5, I definitely expect a lot more upside. So that brings me to Ethereum. So here's the hourly chart of Ethereum of the price section since October 13 low into the recent high. There's no other way than counting it as 5 waves. I have looked at it over and over again, and excuse to those that I have not emailed back yet. My priorities is in updating these charts, and I'll get back to you from as soon as possible once all the charts are done, which they pretty much are. So then I get time to email. I have to prioritize the charts, and then I'll get back to your emails, as not all of them are as urgent. But again, I thank you for emailing me and contacting me. So this is, in my humble opinion, loud and clear impulse higher on the hourly time frame and also on the daily time frame, okay? If not, then I have issues with this wave count, where it's a 1-2-1-2 setup, similar to Bitcoin. Now, Bitcoin doesn't have to do what Ethereum does, similarly that Ethereum is not doing what Cardano and Solana and MATIC are doing, right? Completely different animals. Problem here is this blue wave 1 is as equal long as green wave 1. Most of the time, a 1 degree lower wave is not equally long to a 1 degree higher wave. Seems weird. Second, this wave 2 was very loud and clear, 5 waves up in this case. And it can't be, it must be 3. And I cannot make it 3. I cannot make this rally from the October low to the recent high 3 waves. If you can, please do so. It doesn't fit on the daily candles. It doesn't fit on the hourly candles. So that then leads to believe that we are still in a complex red wave 2B. That will bring us back to the start of this diagonal A wave, which is around $1,000. Okay, it wouldn't surprise me. So this is then a very complex double zigzag type of correction where the September low was a W, the recent high was X, and this is going to be a Y. So it's an X, WXY. I don't really like the labeling, but this is then would be the official labeling for this decline. So we have W, this is then A. Then we have a complex wave B, which bottoms in October 13th. 5 waves up for a wave C. Okay, as I said, C waves are 9 out of 10 times 5 waves, except for diagonal where it's not so clear. So now we seem to be working on 3, 4, and 5. And lo and behold, if we would zoom in on the hourly chart once again, we see a nice impulse following lower. 1, 2, 3, 4, 5 for 1, 2, 1, 2, 3, 4, 5 for 1. Spike yesterday was wave 2, 3, 4, 1, 2, 3, 4, 5. And we should be completing 3, 4, and 5, as you see. So this is, I would say, almost 9 out of 10 scribbles accounted for. You can see here how this blue wave 3 bottomed almost exactly at 161.8. Intra-hour, we definitely stepped below it. It's fine. A nice 38.2% retrace for this wave 4. Another impulse lower. And now we should be completing this red wave 3. Okay, this red wave 3, 4, and 5 to about 1,000. It's, to me, so far the only way to resolve this price action that has occurred since the August top. Wouldn't surprise me, diagonals are often retraced to their beginning, which is always the wave 2, in this case low. So that matches. The hourly chart starts to match, the daily chart now as well. October 13 to November 3rd, I think it was, rally is 5. I have no other way to see it that way. Then we get a very deep wave 2B. I like it. So this is now the preferred wave count. I have no other way yet of interpreting the price action from the August low into the November high, because as I said, I cannot see it as a 1-2 setup because of these issues. If it is, oh boy, okay, so be it, but I don't see it. I don't see it, and I got to be honest. So as you can see, this has been a lot of work trying to figure out all these little waves. As somebody, I think it was Incredible, tweeted yesterday, just sit back and let things progress nicely, and let the market figure it. And then take a deep breath and reassess again. Well, here is MATIC. Oh boy, again, it shows you no guarantees. Even if price is well above all the good things, above the 200-day, the 50-day cloud, all those things, there's no guarantee it will just keep on going forever. That is not. The only guarantee we have are stops and taking profits. So honestly, as I showed you, my crypto trading system didn't go along until here, sold here, and then we got stopped out at entry again. So who couldn't care less about this whole decline? Couldn't care less, you're out. If anything, it went short. If you can short it, you're making good money. Absolutely. So the wave count, though, this means that we again have a 1, 2, 3 wave higher only. It definitely looked much more impulsive from the upside. It has labeled as a 1, a 2, and a 3, but the current decline tells me that is not going to happen. We only have 5, 3, looks like a 3 type of rally once again. It's a little odd, but hey, it is what it is. I can make it 5, whatever it is. If that's the case, then we have an A, B, C, and then a continuation for this wave 4, potentially back to where we started. But again, this is a bit overlapping price action, so we have to take it with a little bit of a grain of salt, because this whole rally since September looks kind of messy. So we'll have to see how this resolves, but this is one of the few that have now a lower probability. It was quite easy there for a while, and then this one becomes less certain. It happens. This is how markets move. Eventually, I would really like to see a nice and clean impulse, because trust me, bear markets only give headaches, nothing else. Bull markets are so much easier to assess. So please bear with me and donate some migraine pills. I could really use them. I'm trying my hardest, and it really sometimes sucks to see such a nice setup, the 1-2-1-2 setup, just get blown out of the water, and we have to do it all over again. But 60% of the time it works all the time, and that's all we can get out of it. Then we move on to the blockchain companies. Here we have Mara, so far bottomed right here in this ideal gray wave 5 target zone. There are enough scribbles in place to consider this impulse lower since the late October low. Still looks good for this 1-2 setup. Follows a little bit better in the path of Ethereum. Riot, definitely a deep retrace as well. If we go below the early July low, then these 5 waves up were part of a irregular expanded flat, with the 5 waves up being a C wave. Again, wrong footing me, and I would say, oh, that's a nasty trick the market pulled on me, but we'll have to assess it for now as is. Looks better as 5 waves lower than anything else, but below $4, and this was then a B, and a C wave. Okay, so that is all I have for today. Remember, 60% of the time it works every time. This is not an excuse, but this is what you can get out of the markets. It is impossible to nail every single move all the time. I think we did pretty well for a while. Again, the pullback was expected. It came, and it definitely over-delivered. So that is then something we need to go back to the drawing board. We anticipate, we monitor, we adjust. We anticipated the pullback, we monitor it. All right, too far for several of these, too far, and then we adjust accordingly. And Avalanche, Cardano, and Solana just presented minor changes. We're looking for lower for those ones as well, unless they broke higher, and they failed to do that. Bitcoin threw its own monkey wrench in, and Ethereum required some adaptation, but still looks good for the larger 1-2-1-2 setup, with a deeper retrace than originally anticipated. So I hope you appreciate this hard work. Stick with it, trade safe, take profits. This is still not a grandmother's market. This is a market where you have to stay on your toes. And unfortunately, bear markets are, of course, designed to destroy wealth, so to say. As I always say, he or she who loses the least amount of money comes out the winner. And I see plenty of people pulling out and say, okay, then I'll just pull out completely, but they won't get back until we're close to the top again. So that's not a solution either. Anyway, take care, trade safe, and I'll see you all on Friday. Bye.